This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on April 13th, a Thursday, 2017 at 8:44 a.m. Mountain Time. The reason we mention it's Thursday, it's a long weekend for obviously Good Friday, Easter long weekend, Easter Sunday. A lot of people are off on Monday as well, so enjoy the long weekend. Our radio show runs on 6:30 CHED Sunday afternoon at 3. We have not been bumped for the Oilers hockey game. That's later tonight against the Sharks. Good luck to our Edmonton Oilers. Don't forget, if you ever miss a radio show, they're archived, streaming live for you at rarecoloreddiamonds.com, rarecoloreddiamonds.com. You can listen to them there. We have a podcast through iTunes. Type in The World Financial Report on Radio. We're portable. We go anywhere you do, and we're podcasting. Podcasting is so popular right now, and we encourage you to listen to our radio show via podcast. Connect with Harold. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. See it online. Featured diamond of the week, rarecoloreddiamonds.com. In the second half of the show, Sotheby's has an auction coming up in May in Geneva. And you won't believe the diamond earrings they have up for auction. The projection is they could sell for around $70 million. We'll talk about that in the second half of the show. Now, as we tape today's program, it was interesting to note that U.S. President Donald Trump spoke with the Wall Street Journal the other day, and U.S. President Trump said the dollar is getting too strong. So here we go again. He's jawboning the dollar. Comments which saw the greenback lose ground. Well, the Bloomberg Dollar Spot Index, it fell below its 200-day moving average. In the same interview, the president hinted that he is open to keeping Janet Yellen at the head of the Federal Reserve after her term expires next February. Treasury yields fell as he says he's a fan of low interest rates. And one other note, he also dropped his campaign promise to label China a currency manipulator. We will talk after Harold's commentary about the Canadian dollar. And they did not raise rates here in Canada. Pelose, the head of the Bank of Canada, kept interest rates where they were this week. And we have a story about where the Canadian dollar will be going in the future. And as we've talked about before, Harold, United States raising rates, Canada static or possibly cutting rates. As a result, we're going to see a stronger U.S. dollar. And even if Donald Trump does try and jawbone the dollar, at some point there's not going to be much he can do about it because the world's currencies will weaken against the U.S. dollar based on the interest rate differential.
You are 100% correct, Randy. There's no way that I see the U.S. dollar falling because the U.S. is the only country that can and is raising interest rates at this point. So even though Donald Trump came out and said what he said, the dollar's been up the last 2 days very strong. In fact, as we're taping the show, right now the dollar's up a half a penny. So we're above par at par plus 51. I think the market looks great. And I'm proud to say that I believe that we are the only analysts that got this correct, but we've always said that there's a direct correlation between the U.S. dollar and gold. When the U.S. dollar is strong, gold is weak. And that's always been the case, except back in the early 80s when we saw interest rates going up to 22% and gold had just come off a run of $850. So that was the only time really that we had a combination of a strong U.S. dollar and a strong gold price. And after that, gold fell off, but that was due to something different. about 3 or 4 weeks ago, we started to notice that it was possible that we could be getting into a similar situation, that the U.S. dollar would remain strong as a reserve currency, and as the Federal Reserve is raising interest rates in the States, every other country is dropping interest rates, and gold should be dropping. However, gold is doing extremely well. In fact, on Wednesday, gold was up $20 on the day. So we're seeing a situation that has only happened in my thoughts one time before, and I had seen this happen. I'm looking at similar situations happening in the market and saying, you know something, we could literally see a run in the gold market even though the U.S. dollar is strong, and that's exactly what's happening at this point. And that would be a phenomenal situation for us because we're bullish on gold. We think the gold long-term is going to eclipse $1,900 and possibly go, depending on how severe the situations get, you know, possibly above $2,000 or $2,500. So the fact is that gold is moving. It's looking very strong, and so is the U.S. dollar, which is a phenomenon that has only happened one time before. Again, these are the type of trends that I look for personally so my clients can get involved. We think that we're getting involved in another trend in gold that is going to take us substantially higher. So we want to buy gold. However, it's all in the way that you bought it. Don't leverage gold and don't finance gold. If you do that, you're going to get in trouble. You know, the fact is, if we're going to catch a long-term trend in gold that's going to go substantially higher, we need to be in the market for the long term, and we need to own the actual physical. So it's coming up within the very near future. We're just putting the final touches on our private website, but we're going to have a members-only website, you know, that encumbers many of the businesses that we have. A lot of our clients are involved in Natural Diamond Investment Company and Eagle, which is a rough diamond company. But on top of that, we have our gold deal coming up, and it's going to be sensational. At first, you know, it's only going to be larger amounts where you're going to be able to purchase kilos of pure physical gold. Either you can take delivery of the gold and we'll ship it directly to you, or we will actually store the gold for you and trade it for you. I've traded gold for half of my life, been very successful in trading the gold market, and I think that if we are identifying another trend at this point, that we should be able to bring the gold for you, to you, and be able to trade it for you. So what you're literally going to be able to do, I know this sounds outrageous, but it is true, and the only reason that we can do this is that we are owners of these mines in Venezuela and in Africa. So basically, when you buy gold from a dealer, you buy at the ask price and you sell at the bid price. The ask price is always higher than the bid because that's the spread that the dealer makes. That's how he makes his commission. Well, we're not going to charge that. We're going to allow our clients to buy at the bid and sell at the bid. So there is no commission and there is no spread. That means that if you buy gold at $1,200 and it goes to $1,201, you are literally in profits at that point. On top of that, we will even store the gold for you, and then on top of that, I will trade the gold for you at no commission. So this is what's being set up as we speak. We're probably about 2 weeks away for the private website to be finished. It's going to be a very exciting time, and I think the timing is perfect that we could literally see a run in gold and a strong U.S. dollar at the same time. Now, one of the reasons that I'm so bullish on gold at this point is primarily due to the fact that in the first 2 months that President Trump has been president, he's almost started a war with several countries. We bombed Syria the other day, and the biggest concern that I have, and I mentioned it as he was getting elected, is that his attitude towards North Korea. That's a very dangerous situation, and it's already starting to affect the marketplace. The president of China was here in Palm Beach. I live in South Florida, so I'm privy to that information, and he was here in Palm Beach staying at Mar-a-Lago, which was Marjorie Post's mansion that Donald Trump purchased and turned it into Mar-a-Lago, which is his private resort. It's just spectacular. I've been there for dinner many, many times, and it's one of the amazing pieces of real estate in all of the country. And that's where Donald Trump stays when he's in town. It's the Southern White House type of thing. But anyways, the fact is that if we do go to war with North Korea, and there's a very, very good chance that that is going to happen, you could literally see the price of gold skyrocket and the U.S. dollar skyrocket at the same time. Because the fact is that when war happens, the currency or the dollar can get very strong in the case of the U.S., where, again, the fighting would not be done on U.S. soil. It would be done basically in that part of the world where North Korea, the biggest fear would be that they would attack the U.S. bases in South Korea and in Japan. This is not a good situation. It's a horrible situation. However, it's a situation that is more than likely going to happen. Either we can sit there and watch it happen and just comment on it, or we can position ourselves in the market to make certain that we don't get hurt financially from it. So basically, the way that I see things is that we want to be in two very strong markets at this point. One, we want to be in the U.S. dollar. There's no doubt about that the U.S. dollar is going tremendously higher than where it is right now, and we're going to want to be in the gold market. And I'm going to be able to handle all of that for you. The fact is, how do you get into the U.S. dollar? Well, the most conservative and easiest way to do that is to literally take your Canadian dollars that you've saved, go to the bank, convert it to American dollars, and just keep it that way. And over the next 2, 3, 4 years, I believe that the U.S. dollar is going to gain tremendous strength, and the Canadian dollar, and please don't take this the wrong way, I'm Canadian myself, as is Randy, but the Canadian dollar is going to fall substantially, probably all the way down to around the 62-cent level. Basically, just doing it that way, you'll end up making 20-25% return on the currency, just by converting Canadian dollars to American dollars. However, we have private investment programs with my companies, Natural Diamond Investment Company and Eagle Financial, that we allow our clients to partner with us on certain deals that we do in rough diamonds and things like that, where our clients are making over 25% a year return on investment, and those returns are in U.S. dollars. If you want to learn about that, by all means, give me a call, and I'll explain exactly what our programs are and how you can possibly get involved. The minimum accounts are $25,000 to get involved, but again, they pay out very high returns, and they are in U.S. dollars. So again, with what's happening in the first 2 months of Trump's presidency, I think that he's now starting to realize that he may have bitten off more than he can chew. Still believe that we're much better off with Trump than with Hillary because he's still a businessman, and once he gets the hang of this, I believe he's still going to do an excellent job. But as you can see, he's not a pushover. He's a bully. When he makes up his mind, he goes after everything. And again, he's not one to be threatened. Best example is Syria and North Korea. So again, we must position ourselves and get ready for what's coming our way. And if we let it happen and we're not involved in the market, we're going to miss part of that move. So please get in touch with me. Give me a call, and I'll explain to you, number one, how to get involved in gold. Number two, how to get involved in the U.S. dollar. And number three, how to get out of Canadian dollar-based investments, mostly retirement savings plans, which are doing horrible. And as the U.S. dollar falls further, your retirement savings plans are going to do even worse. Let me help you position yourself correctly in the marketplace to take advantage of current events and make you the money that you need to be making, and making it in U.S. dollars. So, again, at this point, Randy, I'm seeing the perfect storm come together. We're literally going to see, and it's happening in front of our very eyes, a time that has only happened one time in history before, when the U.S. dollar and gold move in the same direction, and that's going to be substantially higher.
Telephone number. Write this down. 1-800-432-1022. 1-800-432-1022. That number, call it. It's a free call, and you can speak personally and privately with Harold Siegel about investing in the programs that he has and has just mentioned. If you would like to learn more, connect with him. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. If you've been listening to the show for 10, 15 years, we're getting a lot of people who have listened for many, many years calling and speaking with Harold, realizing now is the time to pull the trigger. And then even people who have been listening for a short period of time are realizing that these opportunities that Harold giving to our radio listeners aren't going to last forever. So pick up the phone, give Harold a call, 1-800-432-1022. Our featured diamond of the week from rarecolorediamonds.com is a beautiful 0.44 carat oval cut, fancy, vivid, purplish pink argyle. We'll talk about the argyle mine and diamonds, earrings, up for auction in May. Sotheby's, Geneva, $70 million they could go for. We'll talk about it in the second half of the program. These diamonds, these earrings, they are absolutely stunning. As promised, we want to talk about our Canadian dollar. And I remember, as I've talked about before, back in 2001, George W. Bush was being inaugurated in the United States. The Canadian dollar was right around 63, 64 cents to the U.S. dollar. Top loonie forecasters say weakness ahead on more Fed hikes. The Canadian dollar will weaken in the coming months as the Federal Reserve is expected to continue increasing rates while the Bank of Canada is bound to stay where they are, and that's what they did during the week. Canada, we did not increase interest rates. We did not lower them. Static. The loonie started strong in 2017, recovering from a 10-month low at the end of 2016 by taking advantage of January's broad-based decline in the U.S. dollar. But it has faltered in recent weeks, reducing its gain to pretty much flat, lagging most of the group of 10 currencies. Well, Canada's economy has shown signs of improvement lately, posting higher than expected growth, retail, and job numbers. There hasn't been enough, really, to convince the Bank of Canada that they need to raise interest rates, and the suspicion is that's not going to happen for quite some time. The Fed, on the other hand, has hiked twice in the last 4 months and is on track for additional increases as the U.S. economy picks up. That will put pressure on the Canadian dollar, according to Scott Pedruska, a senior advisor at SVB, a financial group of Santa Clara, California. He says, I'm in the camp that thinks the U.S. dollar is going to be strong. And he was one of the top Bloomberg people when it came to forecasting the Canadian dollar when they ranked them in the first quarter. And he expects the loonie to slip to about a penny to about 135 over the next 6 months. He says Canadian volatility is very low, and when volatility is low, that's where the interest rate differentials become the dominant theme. The Canadian dollar will also suffer from a likely slowdown in economic growth in the United States and China, which will filter through to the Canadian economy. That, according to David Doyle, a North American economist at Macquarie Capital Markets. We've talked about him before, and he was one of the top-ranked loonie forecasters as well, according to Bloomberg. He says, we're seeing faltering growth around the world, adding that he expects the Canadian dollar to weaken to 153 by the end of the year. That would be a major move, as here we are right around 134. 153 by the end of the year, the most bearish forecast of all analysts surveyed by Bloomberg. And it's interesting to note, we have talked about Jared Dillian in the past, an analyst who writes different reports that we've put in our free weekly newsletter. Dillian has gone on to say that he believes we could see 150, 160 in the U.S. dollar in the next couple of years against the Canadian dollar. So it's something that we'll have to keep an eye on. But the trend, obviously, as Harold has said for many, many years, is your friend. And if the United States is going to be raising interest rates, Canada static, then you're going to see that U.S. dollar go up. And there are some serious concerns right now about the housing market in Canada. Not only Toronto, but Vancouver as well. I know where my sister lives in Vancouver, there was a home that sold for $200,000 under the list price. That's how much they had to bring it down to get it sold. And the market right now is very, very slow in Vancouver. Now in Toronto, you have pretty much a full-blown mania. In fact, all of last year, the market was up 33%. And if you get our free weekly newsletter, I really encourage you to get our newsletter from Harold. Connect with him, 1-800-432-1022, or go to rarecoloreddiamonds.com, because in our free weekly newsletter, we have a lot of material on the Canadian housing market. And it's interesting to note, we have people coming out and saying in a survey, was through CIBC this week, that they don't ever see the real estate market in Canada going down. And these were the same sort of comments that we were hearing in the United States prior to their market meltdown, where real estate went down by 25, 30, 40, 50% in some markets. It's also interesting to note 2 and 3 homeowners won't sell because of how much it costs to buy again. We also have the quote, a full-blown housing bubble. Economists alarmed by the view of never-ending price gains. More than half of the country believes home prices will never fall, according to a poll by CIBC. And in particular, they're talking about Toronto and Vancouver. One of the other stories we have, Calgary is in a wash. A record number of vacant condos and houses built at the end of the boom. Royal Bank of Canada CEO increasingly concerned about Toronto and Vancouver housing markets. And we're not the only ones that should be concerned in Australia. There is Jonathan Tepper, the founder of a London-based research firm. He believes that Australia is one of the biggest housing bubbles in the history of the planet. And you can read that story in our free weekly newsletter. But these are the things that could really drive the Canadian dollar down if we start to see regulations go into place to curb what's happening in Toronto and in Ontario. They've already done some curbing in BC. If these markets start to pull back in a major way, it's going to have a serious, serious impact on the Canadian dollar and the Canadian economy. So here's hoping they can do it in a way that this doesn't develop into a massive bubble that bursts. And we saw what happened in the United States. The pain was obviously very, very enormous, and it was sad to see. But if you want to get an update from Harold on the Canadian dollar, the Canadian real estate market, he's there for you. All you need to do is reach out, give him a call, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. And we'll come back and talk about our featured diamond of the week. Also, Sotheby's Geneva May auction sale, $70 million worth of diamond earrings. 2 earrings going up for auction. We'll tell you about it. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on April 13th, a Thursday. Obviously, we're heading into the Easter long weekend, Good Friday, Easter Sunday. A lot of people have Monday off as well. Enjoy your long weekend. And good luck to our Edmonton Oilers, who play later tonight against the Sharks of San Jose. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. It is absolutely gorgeous. I love the oval cut. You can see it online, a video of it. Featured diamond of the week, rarecoloreddiamonds.com. Now, last week, we brought to your attention that there was a diamond sold for $71.2 million. It was originally called the pink diamond, and it was absolutely one of the greatest diamonds that the world has ever produced. And this pink diamond ended up being sold to Chow Tai Fook, a Hong Kong-based jewelry company, and they renamed the diamond the CTF Pink. So it has a new name now, the CTF Pink. Coming up in May, Sotheby's and Christie's always have back-to-back sales in Geneva. Well, we have found out exactly what Sotheby's is going to be auctioning off. Their big one is, and you can see the information in our free weekly newsletter, 2 in a million, they say, mismatched diamonds valued at a staggering $67.7 million, right around $70 million, tipped to become the most expensive earrings ever as they go under the hammer. Now, Sotheby's has valued Apollo, which is a blue diamond, and this blue diamond earring is just unbelievable. They value that at 40 million British pounds, and they say the Artemis is at 14.5 million British pounds, so together 55 million British pounds. You do the conversion on that, Harold, that's around $69 million, $69 to $70 million, depending on the day currency-wise. But we'll keep an eye out for Christie's to see what they bring to the table, because they like to compete against each other when it comes to the auction season in Geneva. And we know that the results we've seen from past years have been spectacular, but a gorgeous, gorgeous set of earrings, and look forward to seeing exactly how much they sell for. Now, our featured diamond of the week is one of those diamonds that is a must-look at, and for those that have a diamond collection portfolio, this would be a perfect addition.
You better believe it. It is a stunning diamond. We got to talk. I got to say that last week, with the pink star selling for $71 million, I still believe that diamond was undervalued. I mean, it's probably rated as one of the best diamonds ever in the world that went to auction. And again, I still think that diamond eventually will end up selling for over $100 million, because vivid pink diamonds of that caliber and was off the charts. It was not only internally flawless, but it was a type 2A, which only 0.002% of diamonds ever reached that type of level. So it was such a rare diamond that I do believe that if the diamond was actually smaller, if it was a 5 carat or a 10 carat, it would have sold for $4 to $5 million a carat. That's what that diamond should have sold for. But again, to see a $350 million diamond hit the auction blocks, I don't know if that would have even sold at that point. So the gentleman that did buy it, and I really don't like the name, it isn't sexy in any way, especially for a diamond like that, but he bought it way undervalued. He's obviously a very sharp businessman that is going to make a fortune on that particular diamond. And I know the people that sold the diamond because I'm partners with them on a vivid blue Asher cut diamond, one of the rarest blue diamonds ever, and he was the owner of that, and we actually partnered on that diamond. So, again, congratulations on the sale of that diamond. I think it's going to definitely sell for over $100 million. In fact, he could charge over $100 million, even though the buyers know what he paid for it. So the diamond business is doing extremely well. With the uncertainty in the world, with interest rates basically down to zero, with negative interest rates in Europe, and, the fear in the United States with Donald Trump as president, hard asset markets are looking very strong. Again, if gold is going to run at this particular point because of current events and the strength of the dollar type of thing, then we have to look at diamonds are going to continue to run also, because they're so rare, they're portable private wealth, they could be sold in other currencies. It's a very, very important asset. And then when you take the feature diamond this week, which is one of the rarest diamonds you'll ever see, because it comes from the Argyle mine. The Argyle mine in Western Australia produces 95% of the pink diamonds in this world. 95% of the diamonds that come out of the Argyle mine are under a quarter carat. This diamond is twice that size. On top of it, it's vivid in color, which is the highest saturation of color, which makes this diamond so unbelievably rare. And you can just look by the video of it, how beautiful this diamond is. That's a true collector's diamond. Now, again, we talk about diamonds that sell at auction for, 70 million and 50 million and 30 million, but that's not the reality. The reality is that most people can never afford that type of money. Most diamonds that sell at auction will sell between $10 and $100 or $200,000. And in most cases, it's those diamonds that actually have the biggest return because they're affordable to so many people. But a $70 million diamond isn't. So that's why there's only a few people that could ever bid on a diamond like that. But when you get into a diamond like the one that we're showing as a featured diamond, it's in a lot of people's wheelhouse as far as being able to afford a diamond like that. The Argyle mine, the reason that this is such an amazing situation, produces 95% of the world's pink diamonds, and it's going to close by 2020, which is less than 3 years from now. So when you talk about a diamond, most of the time we talk about diamonds as a long-term investment. This is a shorter to intermediate investment because in all reality, the mine is going to close in 3 years. Give it a couple years for all the diamonds to run out, and you're talking about a diamond that will be worth substantially more than what you paid for it at this time. It's one of the better investments. Again, it can be sold in American dollars, and the fact is that you will not be able to get diamonds like this anymore once the mine closes. So as Economics 101 tells you, that supply and demand, when the demand is high and supplies are low, the prices tend to go higher, and this is a perfect example of that. This is a phenomenal investment diamond that is available to all of our listeners and clients, and it is something that you should definitely look at as a very strong investment. The longer you put that diamond away, the more valuable it will become.
And you talk about Chow Tai Fook, who renamed it the CTF Pink, the Pink Star Diamond, bought it for $71.2 million. Harold is a very big advocate of green diamonds, and last year, this same organization, they went out and bought the Aurora Green Diamond, and that was for a good chunk of change. If I remember correctly, it was around $16 million that it went for, so it went for a great price. Go take a look at our featured Diamond of the Week online at rarecoloreddiamonds.com. rarecoloreddiamonds.com. It's a .44 carat oval cut, fancy, vivid, purplish pink Argyle featured Diamond of the Week. We have video of the diamond there. And Harold, I know that you really do advocate for green diamonds. You believe that their time is coming. In fact, it's here now, and we had an early indication of that when last year the Aurora Green sold for just a beautiful price. It really was one of the world's greatest green diamonds, and I know that you have many green diamonds within the rarecoloreddiamonds.com vaults that many people are looking at it investing in.
You better believe it. As much as blue diamonds have gone up, and blue diamonds have made people filthy, filthy rich. I've never seen a market that has ever gone up more than blue diamonds have. Back in 2005, at auction, vivid blue diamonds were selling in and around $200,000 a carat. It's now 2017, and last year in 2016, these same vivid blue, important diamonds were up to $4 to $5 million a carat from 200,000 just 12 years ago. So you're talking about returns that are astronomical. My job is to find the next major trends. We've discovered trends in metals and in currencies and in oil and in certain diamonds. The next big trend in diamonds is in green diamonds. Some are still affordable. As Randy mentioned, the Aurora Green, which is a 5-carat vivid green diamond, went to auction last year and sold for $15 million, $3 million a carat. My guess is that these important green diamonds are going to sell upwards of $5 to $6 million a carat. So the fact is that we believe that green diamonds are the next blues, and we are mining those diamonds. They come out of Central and South America. My partners are fourth-generation miners from Venezuela, own their own diamond and gold mines, and that's why we're able to bring these deals to our clients, because we are the actual miners. So, again, that's where all the money is made. We want our clients to get involved on the ground floor. We want our clients to be able to buy the right investment and make the maximum return on their invested dollar, and that's exactly what we're doing. We feel that the gold market is getting ready to take off again. We believe the U.S. dollar is going to be the strongest currency. We want our clients to be in that. We want to be out of Canadian dollars because the Canadian economy is in big trouble and the Canadian dollar is going to fall substantially. You're going to notice this when you travel. You're going to have to convert. Right now, it's 1,350 Canadian dollars to buy 1,000 American. Soon, within the foreseeable near future, it's going to cost you 2,000 Canadian to buy 1,000 American. We want to make sure that we take advantage of that and capitalize on it and make money off of it. And that's what I can show you. On top of that, diamonds are priced in U.S. dollars. So we want to get into these dollars at the trend. And again, these green diamonds are going to do nothing but go up in value. So all in all, at this point, Randy, as crazy as the world finances are and the markets are and as volatile as things are getting, we have a firm grasp on private investments that our clients are investing in that are in U.S. dollars that are making us over 25% a year. If that's of interest to you, please get in touch with us and we'll explain exactly how we're able to do this and how you can possibly participate.
And to confirm, we did it on the last show, the Aurora Green was a 5.03 carat vivid green diamond, VS2 clarity. May of 2016, it became the largest ever vivid green diamond to sell at auction. The record was previously held by a 2.54 carat fancy vivid green VS1 diamond that was sold by Sotheby's on November 17, 2009 for $1.22 million per carat, according to reports. On May 31, 2016, the diamond, which was originally owned by Scarcelli Diamonds, was sold by Christie's for a record-setting price per carat, $3.3 million, to Chinese jewelry company Chow Tai Fook. The total $16.8 million. That's why we're very excited about the potential of the diamond market when it comes to the greens. And one of the things we touched on the top of the show was the Canadian dollar. And you may remember in a past newsletter here earlier in the month, we had the story about ex-Goldman Sachs Asia Chair and Vice Chair Ken Cordes. He was on the Canadian Business Channel, and he said he saw the loonie sagging into the mid-60s and below. And he was concerned about what was going to be happening to the Canadian dollar versus the U.S. dollar over the next 18 months. So there are a lot of bright minds, obviously headed up by Harold Siegel, saying that now is the time to shift some of your money around from Canadian into U.S. currency, and ideally even be getting paid in U.S. dollars on your investments, because the Canadian dollar, the trend is obviously going against it. The trend is in favor of the U.S. dollar. And Harold, you take a look at what's happening in Canada and this housing market situation, and I really encourage people to get our free weekly newsletter from you, 1-800-432-1022, or connect with you at rarecoloreddiamonds.com, because this situation in Toronto, if it does go, what could that potentially do to the Canadian economy? Well, let's face it, it could be serious ramifications and ripple effects throughout the entire country.
You better believe it. Again, and I'm surprised that people don't go back in history and realize what a bubble can do to you. Because the fact is that it's happened several times. And a real estate bubble is very difficult to get out of because real estate takes a while to sell. So in 2008 in the States, when we had the mortgage debacle here, again, it pretty well destroyed the real estate market, the banking system, and people's lives individually because they were having their homes taken away from them. They were being repossessed, and it was a horrible situation. Now, in Toronto, again, you've got a situation where prices are going up ridiculously. And the fact is that if you sell your home and take the profit, you can't buy another home because those homes are going up tremendously also. And it's going to affect the banking system, because once the market does crash, like it is starting to happen in Vancouver, and let's face it, in Vancouver, you had all the money coming in from overseas, from the Orient, that were buying up Vancouver. Once they put on that tax on foreign investment, that's dried up. In Canada, in Toronto, they're going to have to do something similar. The fact is that the everyday person is going to get hurt if they start to speculate into the real estate market in Toronto. It's a very, very dangerous scenario, one that I would very strongly recommend that you avoid. If you do need to sell your home to take a huge profit, just hope that there's rental homes that are reasonable for you to move into. Otherwise, you're going to be out of the housing market.
And that's another challenge in Toronto, the rental market. Because it's so tight, you have those that are the owners of the different rentals jacking up prices, and people are practically having to sleep in their cars at times. So it's a real tough situation in Toronto right now. They're going to have to get it under control. I know different government officials from federal, provincial, and municipal in Ontario are going to be meeting to take a look at what can be done. But it would have a serious ramification for our country if we get to a bubble and it bursts in Toronto. We're starting to see already, as I mentioned before, my sister in Vancouver had to have her home appraised, and they were looking at comps in Vancouver, and what the home in that area that they were comping was listed for and what it sold for was $200,000 less, Harold. And that's something that we could see potentially more and more in Vancouver, not until they get things under control in Toronto, but everyone is trying to get into this market. They see, I'm making 30% on a home, and if this thing goes, it could be very, very serious. Speak with Harold Siegel about investing in hard assets, diamonds, gold, silver. Where does the Canadian real estate market potentially go, the Canadian dollar go? Talk with Harold, and he'll be happy to speak with you personally and privately. 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. One of my favorite stories about diamonds, and we were able to go back and dig it up again, and I think it's worth mentioning. In 1980, the highest auction price paid for a diamond was $127,000 a carat for a 7.27 carat pink diamond. The record was shattered in 1987 by the first high-quality red diamond to be sold at auction. It was the .95 carat Hancock Red. It sold for close to $1 million a carat. Now, the Hancock Red was sold by the heirs of the American owner, Warren Hancock, a Montana rancher and diamond collector. Now, Mr. Hancock had gone out and picked up his diamonds at retail prices from his local jeweler, and he had reportedly paid about $13,500 for the almost 1 carat red diamond, which became known as the Hancock Red. That was in 1956. It's fair to say this was one of the greatest gemstone investments in the history of the planet. Also, between 2002 and 2010, the index for diamonds from the Argyle Pink Diamond Tender increased 108%, while white diamonds rose 22%, that according to Josephine Johnson, head of the Argyle Pink Diamonds, and that's something that people have to keep in mind when they're investing in hard assets. Sure, you may have your stocks, bonds, and real estate, but when you get into the hard assets like diamonds, gold, and silver, the returns, Harold, can be very, very juicy at times, as we really believe going forward when it gets to the Argyle diamonds and the Argyle mine shuts down, the prices that people are willing to pay when 90 to 95% of the diamonds are gone could become very, very interesting.
You bet, Randy, and that's what we're banking on. Again, these are true treasures. They're the most concentrated form of wealth on earth. And these diamonds will not be here any longer once that mine closes. So, again, I think it's an amazing opportunity. When you look at what's available, as far as investments go today, nothing pays because interest rates are down to basically zero. Canadian interest rates are down to 0.5%, soon going to go to zero. And after that, go to negative. It will mean that when you put your money in the bank, instead of getting interest back, you're going to literally pay the bank to hold on to your money. How crazy is that? And the banks are not stable. There's C-15 bill in Canada, which means that the banks, if they go under, can take your money. Everything over $100,000, they can keep. That's not a good situation. If you're not familiar with what's happening in Canada, with the currency, with the C-15 bill, with the real estate market and all that, I'm here to help. Just give me a call. I'll explain what's going on and see if there's any opportunity for you to be able to profit from it.
1-800-432-1022. Mark this number down. Give Harold a call. The call is free. Obviously, Harold will be happy to sit down and speak with you. He speaks with hundreds of people in any given month, thousands really, every given month that listen to our radio program, and you will speak with him. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a .44 carat, oval cut, fancy, vivid, purplish pink argyle. See it at rarecoloreddiamonds.com, featured diamond of the week. And I really encourage you to get our free weekly newsletter. Read the material on the Canadian housing market. Nearly 2 in 3 homeowners won't sell because of how much it costs to buy again, according to the CIBC. Also, full-blown housing bubble. Economists alarmed by view of never-ending price gains. More than half of the country, Canada, believes home prices will never fall, according to a new poll from CIBC. And Calgary is awash in a record number of vacant condos and homes built at the end of the boom. The Royal Bank of Canada CEO coming out and saying increasingly concerned about Toronto and Vancouver housing markets. And there is some serious concern as to what will be happening there, and even in Australia. As we touched on, Jonathan Tepper, founder of the London-based research firm that bears his name, said that he believes that it's the biggest housing bubble in history down under in Australia, and they have not done a thing to stop it. So, Harold, we have about a minute and a half left here. What do we do now to make money in these very strange geopolitical times and economic times as well?
Well, the first thing is not to speculate. That's the first and foremost, because the markets to a lot of people don't make sense right now. And don't do what they're doing in Toronto. Don't jump in to a market that's topped out and is in a bubble. What you need to do is, number one, look at the trends. And the trend for the U.S. dollar is up. The trend for the Canadian dollar is down. It looks like the trend for gold is starting to go higher. We need to be in those markets. You need to contact me, and I'll explain exactly how these work, how you can get involved. We have our new gold program. We have our Eagle Financial program and our natural diamond program that are all doing extremely well and paying our clients high returns.
Thank you very much, Harold Siegel, for your knowledge and another outstanding show. And happy Easter long weekend to you and your family.
Thank you very much. I wish everybody a wonderful Easter long weekend and a very profitable day.
The question is, how do you invest today so you can retire tomorrow? That's why we do our radio program. Give Harold a call. He speaks with many listeners every week. We'll be happy to talk to you, go through some of the perplexing issues that face us. Obviously, bank bail-ins, negative interest rates, weak Canadian dollar, housing market, cashless society. How do you invest today so you can retire tomorrow? Speak with Harold Siegel, 1-800-432-1022, the website rarecoloreddiamonds.com. Have an outstanding Easter long weekend, and good luck to our Edmonton Oilers tonight playing the Sharks. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.